Chapter 14. In this chapter, well, before I talk about the chapter, I want to talk about what you need to turn in this week. Problem 14.2 from the Romney text. I do give a little bit of help at the end of this presentation. I show the first three, so you can start with the fourth one, which is D. And then my educator lessons 8 and 9, which rely heavily on data analytics materials such as statistics, multiple regression, simple regression. So a good chapter for those that are interested in data analytics. So in this chapter on production cycle, we'll look at activities within the cycle, how the cost accounting system can be helpful in meeting our manufacturing goals for the period. And then finally to identify some threats in the production cycle and to prescribe, I don't know if that's the right word, prescribe some controls that can help mitigate those threats. And then finally we'll look at some decisions that must be made in the production cycle. So the chapter is going to be organized around three major functions of the AIS in the cycle, which is describing the production cycle activities, as well as cost accounting, introduction to major control objectives, and then showing how AIS can store and organize information needs. So those are kind of the three major functions of what the AIS does within the production cycle. We'll probably talk mostly about the first two. So major business activities and related data processing operations in the production cycle. Just like the expenditure cycle and the revenue cycle, it's a recurring set of activities. So the transactions are over and over again. For instance, we request raw materials from the storeroom. We probably do this 100 times a day. There'll be 100 journal entries, the same one: debit work in process, credit, raw materials. All right. So every transaction is probably going to be done multiple times. So there's only a few types of transactions, but there could be literally thousands of journal entries. Accurate and timely cost information is needed. So good input is needed in order. So we have to have accurate, good input in order to have good information about product mix, pricing, budgeting, and cost control. 4 activities in the production cycle done by the manufacturing part: design, planning and scheduling, production operations, and cost accounting. Now, the cost accounting, it can be considered an activity, but it really provides support to the other 3 activities. So first step is product design. So we want to design a product that has good quality, durability. That's kind of the same thing: quality, durability, good functionality, and then minimizes costs. Companies typically try to emphasize 2 of those areas. So if you're, say, Apple, your Apple company, you're looking at quality and durability and functionality. You're not looking too much at minimizing production costs. However, if you're say McDonald's, then minimizing costs is probably important. And quality, functionality, maybe not as important. The product design activity creates 2 main documents: the bill of materials and the operations list. So the bill of materials would contain every single raw material that is used in building the product, and the operations list would show what processes are done for that product. How can accountants be involved in design? They usually are involved in the design area through their target costing department, is cost accounting. So showing how various design trade-offs affect production costs and thereby affecting profitability. For example, you might have maybe a lesser cost machine, so you can minimize costs a bit more. However, the quality is not quite as good as a more expensive machine. But the quality might be good enough to meet your customers' specifications. The accountants can also ensure the AIS collects the right information and provide information about these costs. For instance, machine setups, you might have a design where there's a lot of setups. Maybe we can reduce the amount of setups. So the accountant's going to say, look, this is how expensive it's going to be for you to do each setup, and you have 15 setups because of this machine that you're buying. Also, we want to provide data to accountants to about repair and warranty of current products, because those are, we consider those external failure costs. We want to eliminate those, and so we don't want those creeping into our new product. Second step is budgeting, planning, and scheduling. So we have to have a production plan good enough to meet our existing orders and anticipate short-term demand. This would be more for our MRP type of systems. So two common methods of production planning would be MRP, manufacturing resource planning. MRP2 is what it's called in the manufacturing environment. Basically, we use algorithms and equations to determine the efficient amount, the most efficient way to schedule production planning. So when we should build our product and how much of our product should we build in order to minimize costs, manufacturing costs. Second approach is JIT system. The goal of here is to be responsive to customers. So we're building the product based on customer orders. So it's not really based on demand, but it's based on orders that we've already taken. So with the JIT system, which really probably most important, rather than reducing costs, which you can do, but maybe the most important part of the JIT system is you're going to be a lot more responsive to customer needs. So because of that, then you need a system that's very flexible. In order to be responsive to customers, you need to have a system that's very flexible. So that would be something that the cost accountant would probably want to investigate, is how flexible is this system in building a product. And that means probably a lot of setups that are quick, because with JIT, we want to build it to customer orders. Those orders are already there, so you have a shorter window to build the product than if you're using the MRP2 approach. Some documents, forms, and procedures, master production schedule, how much are we going to build during the period, and when the production should occur. This is probably more important for MRP2, because with JIT we know we're going to produce just to customer orders. Material requisition, that authorizes us to remove raw materials from the storeroom and build them and bring them out to the production line. Again, not so important in a JIT environment, because normally in a JIT environment, the materials are coming from supplier. And so the supplier is going to bring the materials to the loading dock, and the loading dock is going to not go to the storeroom, but immediately the materials will be loaded into the production area. Subsequent transfers of materials should be documented on move tickets. So anytime material is moved, it should be documented. Quality and quantity should be documented, signed for, and the person that's taking custody of that inventory should sign for it, showing that he now has responsibility. So he shouldn't sign for it unless if there's supposed to be 90, he needs to count and see that there are 90 there. How can accountants be involved in planning and scheduling? So making sure that they're collecting their reports and costs consistent with their production planning technique. So if you're MRP2, you're probably going to use job order costing. We're going to collect and report costs using job order costing system. If we're JIT, we should use back order rather than job order or process costing. If you have a homogeneous product, probably should use process costing. All right, third step in the production cycle is the actual manufacture of the products. The way this is done is going to vary greatly, of course, if you're using JIT versus MRP2. The way the product is produced is going to be completely different. Because in JIT, the inventory is coming right from the supplier, not from our storeroom. We're building it probably very quickly, so the manufacturing cycle is going to be quicker. We're going to probably have more automation than you would in an MRP2 environment. Not always, but chances are you will, since you do have to build that thing quicker. There's going to be more of an emphasis on total quality management, and being responsive to customer expectations. All right, computer integrated manufacturing is simply using technology within the production cycle. The accountant then was going to make sure that we have information from this IT system, from this manufacturing system, on raw materials used, labor hours used, machine hours used, and any manufacturing costs incurred. So we need to collect data about that from that production system. So how can the cost accounting area help in this approach? And there's sort of three, principal objectives of cost accounting: provide information for planning controlling and evaluating performance of production. That would be budgets and performance evaluation, standard costing be the first one. Second, provide accurate cost data about products for use in pricing and product decisions, so job order costing, process costing, backflush costing, and then collect and process information used to calculate inventory and cost of goods sold. And so that would be things like, again, job order costing, process costing, and backflush costing for JIT, so we can value the inventory and cost of goods sold in an accurate fashion. 3 types of cost accounting systems: job order, process, and backflush costing. If you recall, with job order costing, we assign costs to jobs using job cost sheets as our document that we use to document our material, labor, and overhead costs. Overhead is normally, we use one cost driver, probably direct labor hours, to apply overhead to the product. Process costing, sort of the same thing, except for is an averaging. So we find our costs and divide by equivalent units of production. So we're going to have material costs, labor costs, overhead costs per equivalent unit of production, and we'll use that to allocate the costs to our units. Backflush costing is used with GIT. I'm not going to discuss it though. What type of cost system is used for homogeneous products? And that's process costing. Job order and backflush would be for more heterogeneous. Choice of job order process costing. You're going to choose if it's heterogeneous, you use job order. Homogeneous, probably use process costing. But it only affects the method used. It doesn't affect the method used for data collection. So let's talk a little bit about data collection. So when production is initiated, issuance of material requisition then would trigger following journal entry. So if I requested $15,000 inventory control, request $15,000 of raw materials from the storeroom, we'll do a journal entry, debit work in process, and credit raw material inventories for $15,000. Now you would do that on either system, process costing system or job order kit system for issuing raw materials. Let's assume that $1,000 of raw materials were returned to inventory. Here we would debit raw material inventory for $1,000 to show that it's been returned, and credit work in process for $1,000. Most of these materials will use barcoding, so it makes it very easy to make this entry. It's going to normally be automatic. And that's also for requisitioning materials, but normally we use barcode or RFID to do that. On direct labor, we can use a job time ticket, paper document used to collect data, like a time card to collect data about labor activity, documents the time worked on each specific task so we can determine the amount of direct labor for each product. Workers can use this data online, enter this data online using barcode technology. If they have a barcode on their badge, we can use that to determine the amount of labor, direct labor, that they did perform on each product. If we have a lot of CIM, a lot of computer integrated manufacturing, we're going to have more overhead costs. So more expensive overhead costs. So the percentage of the product cost that's related to overhead might be higher. We're using computer integrated manufacturing. It might be 30%, 30% or 40%, rather than in a labor intensive environment, might be 10%, 15%. So typically, your overhead costs are higher on a percentage basis where you have a lot of CIM, and your labor costs, direct labor costs, will be lower. Machinery and equipment usage in the factory should be charged to overhead. So what is overhead? Any cost that cannot be directly traced to a specific job. So rent on the factory, can't really trace that to a specific job. Supervisor salary, property taxes on the factory. So all those and many more, depreciation, all those are considered machine depreciation or considered overhead costs. So the AIS needs to collect information about this in order to have more accurate product costs. We also collect the information on same way as inventory on fixed assets. So we'll have barcoded fixed assets so we can enter that information more accurately. Here are some information that you probably want to keep about your fixed asset in your database. ID number, serial number, location, cost, date, vendor name, expected life, so forth. Notice our primary key would probably either serial number or identification number would be your primary key for your fixed asset. Some threats in the production cycle, and we'll try to evaluate these. First, let's talk about some objectives. We want our production and fixed asset acquisitions to be properly authorized. So there should be a production order when we are initiating production. Work in process inventories and fixed assets should be safeguarded so they should be locked up. Maybe have cameras, watch people. Access to these assets should be restricted to only those people that work on those assets. All valid authorized production cycle transactions should be recorded. So if this documentation, production orders, so forth, that we use that in material requisitions, that we use that sometimes to automatically record the inventory. Production cycle transactions need to be recorded accurately. Saw this a little bit in QuickBooks that if you forgot something, you forgot to put in something in a box, it won't let you go any further. Accurate records are maintained and protected from loss. So they're back. In other words, we have backups. And production cycle activities are performed efficiently and effectively. Some threats, unauthorized transactions, so someone getting a hold of a production order and filling it out himself for his own personal use. Theft or destruction of inventories and fixed assets. So again, we want to restrict access to those inventories and fixed assets, maybe have some cameras in place, have good supervision. Recording and posting errors. So we want to have an accurate inventory control system, RFID or barcode technology, which would reduce the threat of input errors. Loss of data, so we want to back up the data. And then inefficiencies and quality control problems, so we want to look at the quality costs, right? Prevention, appraisal, internal and external failure. You want to drop as much as possible, reduce appraisal, internal failure, and external failure. Prevention you might want to increase in order to decrease the other three. Some control procedures, good accurate sales forecast. So I have a good inventory control system that uses algorithms and regression to give you a good accurate sales forecast and good accurate inventory records. Authorization of production through a production order. We restrict access to our blank documents like production orders so that we don't have unauthorized production orders. And material requisitions and so on, anything where there's an authorization needed, those authorizations or those documents related to authorization should be protected. Review and approval of capital asset expenditures. It might be expensive for us to purchase a machine, might be $1 million for some of these machines, for some of this computer integrated manufacturing, so it's probably going to go up the corporate chain and has to be approved by the CFO and CEO. Document all internal movements of inventory, so anytime inventory moves, we use either a material requisition, going from the storeroom to the production area, or within the production area, we use move tickets. Have good separation of functions. So the storeroom personnel should not be somebody that's working on the product. Source data automation, so it's, again, RFID or barcode technology. Online data entry, edit controls. So with QuickBooks, if you put the wrong account number in, you're going to get the wrong, name. You're going to get the wrong vendor name. If you put the wrong account number in, we're trying to pay a vendor, Joe Schmo, and so I put the wrong account number in, his name is not going to come up. All right, so that's an edit control that the account number relates to a specific individual or company. Another edit control is one that you saw that it wouldn't let you go further if you didn't fill in all your screens appropriately. If you put the wrong account number in, it's going to ask you, are you sure? And then you can check, right? And that the vendor name is different than the one that you're trying to pay. Backup and disaster recovery procedures, particularly important for everybody, but most important probably for online companies such as Amazon, that if system goes down, that they have a quote-unquote hot system that are ready to go online within a matter of minutes. Have good performance reports, compare the budget to the actual result, use balanced scorecards. Cost quality measurement, prevention, appraisal, internal failure, external failure. Again, the only one of those that's value added is prevention. So prevention should be used to reduce those other three costs, particularly external failure. So if you have external failure, that means that customers don't like your product and they're using the warranty or they're returning it. I mean, the first thing you should probably do is turn an external failure into an internal failure, and catch that thing before it goes out the door. Decisions that must be made in the production cycle and information acquired. Cost information is generally needed by internal and external users, and so within the plant, we try to have good information like balance scorecards, activity-based costing. Most cost accounting systems, like job order costing, process costing, backlash costing, is meeting financial reporting requirements. So, as you know, if you've worked through a job order system, which you have, or process costing system, you're determining the cost of work in process inventory, raw material inventory, finished goods inventory, and cost of goods sold. And that's to meet your reporting requirements to the SEC. Two major criticisms of traditional cost accounting systems: inappropriate allocation of overhead, inaccurate performance measures. So inappropriate allocation of overhead costs, we can fix that through using activity-based costing. Inaccurate performance measures, balance scorecard would be a good way to give us some really good accurate performance measures that are not all financial based. One potential solution to that first criticism is to use ABC and use multiple cost drivers to allocate costs to the product rather than just one cost driver. A lot of times, volume based, based on direct labor or machine hours, and a lot of times that if you have more than one product, you might be miscosting that product. So multiple cost drivers. By the way, cost driver just cause and effect on relationship of costs. Number of setups means that the more setups I have, the more setup costs that I'll have. So if product A had 15 setups and product B had 1, I need to allocate more setup costs to product A than to product B. Some benefits of ABC: then it should give you better decisions, better cost management, more accurate costing. That we're not going to have that what we call cross-product subsidization, that one product is subsidizing. Typically, the mass-produced product is subsidizing the more complex product. All right, 14.2, just getting you started. What internal control procedure would best prevent or detect the following? I completed the first three for you on the following slides. The first one: a production order was initiated for a product that was already overstocked in the company's warehouse. All right, so that's bad. So production orders should not be initiated without inventory control, ascertaining whether the inventory is available. So examine our records, follow up with a physical check of the inventory. Now that first part, examining our records, may not work if we do not have a good inventory control system with good source data automation, so we have accuracy in our inputs. And then a good inventory control system can give us good information about how much inventory is on hand and when we should order more inventory and how much inventory should we order and when should we order it based on our production orders and based on our demand. A production employee stole items of WIP inventory. Count and document inventory every time it's moved using move ticket. The move ticket must be signed by whoever has custody of the inventory. Restrict access to WIP inventory, so that person who works in the work in process should only be working on the product that he's building. He shouldn't have access to everything in that department, other products that are being made and so forth. Use cameras, and particularly to look at employees that aren't in the places that they should be. We have a rush order tag on a partially completed production job. Became detached from materials and lost, resulting in a costly delay. Use tags to permanently affix to the product. Backup of this information should be on the computer. So that's probably more important than the first one. But really, the best thing is to avoid rush orders. Rush orders, you read the book, The Goal, somebody read it in 311. First 30, 40 pages of that book tell you why you should never have a rush order. They just cause you to have issues with all of your other orders. You just push everything else back. And so now that puts your other orders, particularly in a JT organization, of being late with their delivery to the customer. All right, that is the end of 14. I want you to have a good week. Give me an email. Shoot me an email if you have questions on either the My Educators 8 and 9 or this problem 14.2 or anything in the lecture.